Well, one of the things I've gotten a lot of questions on and have had to do some deep diving into is self employed people and the new tips deduction that the big, beautiful bill created. And I will tell you, there's gray area on this, there is unknown on this. But what I found, a lot of people probably aren't going to like what I found. And that is, it's going to be hard for self employed people to actually take the deduction for tips received. So they can. In fact, the big, beautiful bill explicitly states that self employed people can take a tip deduction. The amount deducted cannot be more than the net income from the business. So if the Schedule C of the filer shows a loss, they can't take a tip deduction. There's a big hurdle, though, that appears in the big, beautiful bill, and that is that qualified tips have to be reported on a 1099 or a W-2, or self-reported by the taxpayer on Form 4137. And so that presents a problem because a lot of self-employed people who receive tips are not going to be getting those tips reported to them on a 1099. Businesses issue 1099s. Your hair salon, your barber, people like that working with the public and getting tips, who's going to give them a 1099? And according to the big, beautiful bill, if it's not reported on a 1099, you can't take a deduction. Now, what do the proposed regulations tell us? The Treasury Department released proposed regulations in September, which reinforces the notion that tips have to be included on a reporting form in order to be deducted. There's even a footnote in the proposed regs that talks about how the House Budget Committee, in the committee notes, talks about that tips must be included on a reporting form in order to be deducted. Now, hold on to the proposed regs for just a few minutes here while I talk about two other pieces of guidance that have come out, because there's also some contradictory things in the proposed regs. So then we have Notice 2025-62, which doesn't really tie into what we're talking about today, but it kind of does. It says that for 2025, businesses that pay tips or who have employees who receive tips are encouraged to separately report tips, but are not required to for 2025. No forms are being updated for 2025. Now, for 2026, that's very different. The W-2, 1099 NEC, 1099 miscellaneous, and 1099K are being updated to include boxes for tips and qualified overtime, which we're not talking about overtime today. So clearly, reporting will be required in 2026 on a reporting form, but not in 2025. Now, that's interesting to know, but it doesn't answer our question of how do self-employed people deal with this deduction. So let's move to the next piece of guidance that came out. Notice 2025-69. So Notice 2025-69 is guidance from the IRS for 1040 filers on taking the tips and overtime deduction on a 2025 tax return. This notice does a number of things like suspending the prohibition on employees who work in a specified service, trade, or business from taking the tips deduction. That is suspended for 2025. It gives us insight into what the IRS says a self-employed person is supposed to do. For example, in item 2 of the notice, we're told that tips must be included in gross income on a 1099 NEC, miscellaneous, or K, but don't need to be separately reported. So say box 1 of 1099 NEC. Say you have someone getting a 1099 NEC, they got $10,000 of compensation as a contractor and $1,000 of tips. Box 1 of their 1099 NEC would need to show $11,000. And if it does, then that would be adequate for them to then deduct $1,000 on their tax return. And the IRS gives an example of how someone whose tips are reported on a 1099 can take the deduction for qualified tips. Now, this implies, in fact, I would say not just implies, it tells us that the IRS's perspective is that if tips are not reported on a reporting form, you don't get a deduction. In fact, there's an example in the instructions to Form 1040. Now, the instructions are not authoritative, but there's an example of someone receiving tips in cash, and the IRS says this person can't take a deduction because the tips were received in cash. Now, that then tells us that a self-employed person who doesn't get tips reported to them on a 1099 is out of luck with taking this deduction, which means all the different like beauty salons, barbers, places like that, self-employed people, they don't take credit cards. See, credit card transactions would be reported on 1099K. A lot of those places, they may not take credit cards. People are paying them in cash. And there's tips included in that cash. But they don't get a deduction, according to the IRS. And it's actually written that way in the big, beautiful bill. Now, I said we'd come back to the proposed regulations because there's contradictory parts to the proposed regs. We have examples 7 and 9 of the proposed regs, where in those examples, the Treasury Department talks about self-employed people working with homeowners. In one case, it's a painter, and in the other example is a landscaper building a patio. And the IRS is talking in this situation about what is a qualifying tip versus not a qualifying tip. And I'm sure that what the Treasury Department will say on this is that these are just examples to help you figure out what's qualifying versus non-qualifying. It's not actually going the next step and taking the deduction. It's just saying this is a qualifying tip and this is not. The problem is that when you read those examples, it's like, well, these are qualifying tips, but you're saying they can't deduct them because the homeowner isn't going to give them a 1099. So there's contradictory things out there. And then we have Form 4137. People have brought up Form 4137 for self-reporting of tips by a self-employed person. Form 4137 is for W-2 employees to use when they've received tips that didn't get run through payroll at their employer because, for example, the amount received was less than $20 for a month, or just they had other tips that they received that didn't get run through payroll. They account for that on Form 4137. The 4137 has always been for employee usage. It's never been for self-employed usage. Some people have also brought up, what if we self-report on Schedule C as like an item under other income or some other notation that says this is a tip and we include it in gross income on Schedule C? That's not listed anywhere. Not in Section 224, which is where the tip deduction comes from in the tax code, not in the proposed regulations or anywhere else. And the layout of Schedule 1A, which is where the deduction is reported, doesn't give any mechanism for a self-employed person to do anything other than show tips reported on a 1099. So, where that leaves us is this. A self-employed person, if they work in one of the 68 occupations listed in the proposed regulations as being an occupation where tipping is customary, that would be hoop number 1. They can, hoop number 2, take the tips deduction if their tips are shown on a 1099. For 2025, the tips must be rolled in to the total income on the 1099. For 2026, the tips have to be broken out and separately reported on the 1099. That's the way it appears to me, which means your self-employed person who doesn't have a 1099 appears to be out of luck on this deduction. Now, as with anything tax related, especially new stuff like this, these things are hard. Gray areas are everywhere, and you might reach a different conclusion or have a different way of looking at this guidance that we have so far. So please give me your feedback, and I'll continue to keep this article that I posted, I'll continue to keep it updated and come back as we have either new information or new thoughts on things. But that's it for this time around on this little tax snippet.